Okay, so moving on, I want to share with you a couple of advanced breakout tips so you can really identify those high probability breakout trades. The first thing is what I call lean against the higher time frame structure. So let's say, for example, the daily time frame. The market is in the range, then it breaks out and come back and retest previous resistance, now act as support, and the daily would usually consolidate for a few candles, maybe two or three. Then you go down to the 4 hour time frame. Chances are you'll see this type of price action where the market is pretty much in a range, right? So this portion over here, the consolidation, on the 4 hour time frame, you would usually see a range. So if you do get a build up that is formed, right, that is our criteria for trading breakouts, right? This is really a high probability breakout because right now, not only do you have a breakout setup, right? This setup is actually leaning against this area of support on the daily time frame. Okay, so the first thing is what I call lean against the higher time frame structure. Right, it can be against a previous resistance turn support. It could be come back and retest this area of support. Basically, the concept is the same. You're leaning against the higher time frame structure. And the second tip that I want to share with you is what I call the build up and false break combo. So it's basically combining these two trading setups, and you'll get a very favorable risk to reward trade. So let's say, for example, on the daily time frame, the market comes into, let's talk about short side, right? The market forms a build up at the lows on the daily time frame. Let me just redo this. Okay, let's say the market forms a build up at the low on the daily time frame. This is the daily. On the 4 hour time frame, what you can look for is the market again. Chances are is that it will be in a range, right? Because this is a build up that is formed. The 4 hour time frame will give you a very much obvious range, and you can look for a false break setup at the highs of the range. You can look for a false break setup, right? And if the market gives you an entry trigger, you can look to get short, right? So you're basically, entering your trade, positioning yourself in this build up in anticipation that if it does break out, you will be in the trade. So this really offers you, right, a very good risk to reward on your trade. So I want to share with you a few examples, right, into this two concept. Okay, so let's see, right? This is the Euro Pound trade, and what I want to highlight to you is to look at this portion over here, right? So this is the area of support, this black line. So let me just change the color so you know that we are referencing to the same line, right? So this is the daily time frame. Notice that price has come into this area of support. So go down to the 4 hour time frame, right? Go back and look for that section, right? It's this one over here. So this is the same line, and on the 4 hour time frame, you can see that this market is pretty much in a range. This range over here, okay, and this is the lows, right? And you're leaning against this line, which is against the daily time frame support. And notice what you got here is a nice build up that is formed near the highs of resistance. So this is what I call a high probability trade, because you have a build up of the highs of resistance, and on top of it, it's leaning against, this particular range is leaning against the daily support. Okay, and again, right, you can simply place a buy stop order above the highs, or you can wait for a candle close before entering your trades. Okay, so this is the concept that I spoke about, which is leaning against the higher time frame structure. Another example is this one over here. This is a copper. So again, right, let me just change this to pink color so we are looking at the same level, right? So this portion, okay, this time around, the market didn't come close to support, unlike the previous trade. But remember, support is an area. So this is an area of support. And you go down to the 4 hour time frame. Right, this is the price action that you see on the 4 hour time frame. Notice that this is the same line, right? That is the daily area of support, and what you got over here is a nice inverse head and shoulders pattern, an inverse head and shoulders pattern, which is a bullish sign of reversal. So again, this is where the chart patterns that you have learned come into play, right? This chart pattern is leaning against the daily area of support, and although you didn't really get a very nice tight build up at the highs over here. This is the highs. The build up pretty much formed over here. This is still a valid trade to take, okay? Because you have a numerous confluence factor, right? The leaning against the higher time frame structure, the inverse head and shoulders pattern, and somewhat build up form just below this area of resistance. Ideally, I would prefer this build up to be formed near the highs, but still, this is a tradable opportunity to get long. Okay, and this is the concept to what I've spoken about, right? Leaning against the higher time frame structure. So now let's move on and talk about the other concept which I spoke about, which is the build up and false break combo. So looking at the daily time frame, all right, so I want you to pay attention to this portion over here. Oops, okay, this portion over here. I want you to pay attention to this portion over here on the daily time frame. So what do I mean by the breakout and build up? So you can see that this market on the daily is in a range. Okay, and you have this build up form over here. Now the question is, can you get an early entry? Okay, to enter the trade before this build up actually breaks down. So this is where you can go down to the 4-hour time frame and look for that setup that I mentioned earlier. So let's just mark out the levels so we can find the right levels later, right? So this is the around the highs of the build up. So if you go down to the 4-hour time frame, okay, let's find it. Treasure hunt. Okay, there it is. So this one over here, this entire portion is basically the build up you saw on the daily time frame. And notice what you got. You got a false break of this previous high. So imagine if you get into this trade shorting near the highs, and the market in this case clearly it did break down, right? It's a very favorable risk to reward trade. You don't usually find this often, but when you do get this, right, this is a trade that you just cannot miss. Okay, so this is an example of a build up with a false break combo. Basically, right, just to reiterate because it's important. If the market forms a build up of this highs, you can go down to the 4-hour time frame. This is the daily. You go down to the 4-hour. Okay, and you look for a range. So in this case, since you are looking to long, you look for a false break of the lows over here in anticipation of higher prices if the market does break out of the build up that is being formed. Okay, so with that said, I just want to do a quick recap, right? Couple of advanced breakout tips to share with you. Number one is that leaning against the higher time frame structure, right? So in this case, you can see that clearly we are using two time frame, right? Number one, the daily is the higher time frame, and the 4-hour is the time frame that you could look for an entry. Okay, so this one, if the daily price is at support, you can look at the 4-hour time frame, looking to lean against the breakout would, or rather the range, right, on the 4-hour time frame will be leaning against the daily support. Okay, and this really increased the odds of the breakout trade working out. And this one over here, the build up and false break combo, is basically if you see a build up, okay, if you see a build up on a daily, okay, this daily time frame, the 4-hour time frame, you can see it's a much clearer established range, and you can then just simply trade the false break of the range in anticipation that if the breakout does break out, the build up does break out, right, you are already positioning yourself in the trade, and it offers a very good risk to reward for you. So with that said, right, I have come to the end of this video, and I'll see you in the next.